I'm David Trainer, CEO of New Constructs. I'm here to talk to you today about my first quarter 2014 best and worst ETFs and mutual funds in the telecom services sector. This sector ranks fourth out of all my sector rankings for the first quarter of 2014, and my ratings are different from other research providers on funds because we look at the actual holdings within every ETF and mutual fund we cover. We cover 400 ETFs and 7,000 mutual funds, and in every situation, we only have good ratings on the funds and ETFs that hold good stocks, while we rate poorly the funds and ETFs and mutual funds that hold bad stocks. Why pay management fees for someone to put you into bad stocks? My favorite mutual fund and ETF for the telecom services sector, Fidelity MSCI Telecommunications Services Index ETF, ticker FCOM, is my top-rated ETF for the sector, while T. Rowe Price Media and Telecommunications Fund, ticker PRMTX, is my top-rated mutual fund. My least favorite ETF is the State Street Spider S&P Telecom, ticker XTL, and my least favorite mutual fund for the telecom services sector is RIDEX Series Funds Telecommunications Fund, ticker RYTLX. Now, every one of my reports will also break down for you exactly how we rate all the stocks in the fund and compare that to how we rate the ETFs and mutual funds. So you really get an extremely good view of how well ETF providers and mutual fund managers are picking stocks in the sector. Now, unfortunately, in the telecom sector, there's not a lot of stocks and not a lot of good stocks to choose from. You can see in figure 3, we've only got 7 stocks that get an attractive or very attractive rating, while 17% of the market cap in the sector is allocated to those stocks. The problem is that none of the funds and ETFs in the sector are allocating to those good stocks, and that's why we don't see any funds or ETFs in the sector with an attractive or better rating. Now, to get a good rating, you got to allocate to good stocks. One of my favorite stocks in the telecom services sector is Verizon, ticker VZ. The company's grown profits, or net operating profit after tax, by 19% compounded annually over the last 8 years, which is really impressive. And currently, the valuation of Verizon, ticker VZ, implies that its profits will permanently decline by 20%. Low expectations, high profits. That's a good thing. You get a bad rating from me if your ETF or mutual fund allocates a lot of capital to stocks we don't like. And one of our least favorite stocks in the telecom services sector is Consolidated Communications Holdings, ticker CNSL. This company's profits have been declining by 4% compounded annually, but to justify the current stock price, the company's got to grow profits for 14 years at 16% compounded annually. That's to justify the current stock price of about $20. Really high expectations for a company that's in a very difficult industry to grow profits, again, at 16% compound annually for 14 years, even while profits over the last several years have been declining at a compounded annual rate of 4%. Bad profits, high expectations, not a good combination. You don't want to pay managers to put you in stocks like that. Thank you.